Hey Big Bulls, welcome back to yet another edition of Bullseye, and we got three very interesting stories for you today.
So in this edition we talk about L&T's 1.5 billion deal with Aramco and beyond. We talk about IREDA's 5,000 crore rupees of QIP and why Adani Wilmar is no longer an Adani stock.
Alright Saloni, so let's talk about the $1.5 billion mega deal that L&T has signed with Aramco. That's big news. What this deal effectively means is that L&T is going to take care of Aramco's carbon capture efforts in Saudi Arabia. And by carbon capture, it means that whatever carbon dioxide Aramco is emitting during the production of its oil refining and everything else, they're going to try and reduce the impact of that on the environment.
Right, but Aramco's growing love affair with Indian companies is not just with L&T, right? It goes beyond that. And let's rewind that a bit, right?
Yep.
Because it was in 2016 when Aramco actually made its first official move and it set up the Indian arm, right? Aramco India. And fast forward a few years, Aramco's interest in India is now growing rapidly, right? Because we've been reading these headlines about how it's been partnering with this firm and that firm. So in February 2024, Faisal Fakir, who is a senior Aramco executive, made it clear that they have got their sights set on India and they are very eager to invest, and they are talking with bunch of Indian firms and actually even hinted at some potential big announcements coming up, that one being L&T, right?
Right, and they have their venture firm as well, which is Prosperity 7, which is doing a lot of this work.
Yes, so even they're planning to set up shop in India, that is as per some reports, and they are also actively hunting for the team to be set up in India. And this is obviously for those early stage investment startups, right? So with a whopping $3 billion at play with their global fund, right, they're planning to invest around $300 million in India with that fund as well. So obviously that's a significant amount.
Right, and also, if I'm not wrong, there's a deal between India and Aramco as well, which happened in October 2023, which is India's oil reserves,
Right.
which is essentially the backup oil that India maintains. Aramco, which is one of India's key oil suppliers, India wanted Aramco to get involved in that as well.
Yeah, and I think Aramco must be a best partner for that, right?
Yeah.
Because they are the world's top oil exporter, and they have been investing more in refineries and petrochemicals across Asia to tap into new markets, right? And even chemicals are key to their plan to expand further downstream. So downstream is basically everything that happens after the oil is extracted, right? That is refining them and selling them into products. And that is why even Aramco India has been focusing on enhancing the efficiency of India's crude oil and liquid petroleum gas, that is the LPG supplies. And they have also collaborated with many local businesses, and they made new partnerships to make a world-class competitive supply chain in this region, right? That's been one of their main mottos as well. So with this history of collaborating with the Indian firms like Indian Oil and even investing in Indian ventures, it seems like they see India as a very big player in tech and innovation, right? And I assume that is where Aramco also wants to be.
Right, but with regard to L&T, this announcement doesn't seem to have done too much to its stock price. It's been fairly a lukewarm response from investors to this mega deal.
Yeah.
Right.
So now let's talk about IREDA's big fundraise, right? This is the Indian Renewable Energy Development Agency, which is a government-backed firm, and they have just got the green light from the shareholders to raise around 5,000 crore from something called as Qualified Institutional Placement, or QIPs, right? So what exactly is a QIP, bud?
Right, so think of a QIP as the firm actually trying to raise capital, but going to the big investors to raise that capital, right? So, and when I'm saying big investors, I'm talking about companies like mutual funds, foreign portfolio investors, insurance companies, all of these scheduled commercial banks, all of these big players in the market are classified as qualified institutional buyers. Now, the advantage with going to a big player like this is that it's long-term capital. These are serious players who are coming in and buying the shares of these companies. So there's a select group of investors that are chosen, and there's an entire process for this as well, right? Now the process is fairly simple. It's like first the company gets the shareholders nod, they get the board nod, they get the shareholders nod, and then they go out there, they get an investment banker, and then they issue the the prospectus and everything else, and then there's a back and forth with regard to the pricing. And they do all of this, the QIBs place their bids, and then and all of this takes a long time to actually come to fruition because it's an entire regulatory process that's involved over here, right? Now, like I was saying, that the big advantage over here is that it's long-term capital that comes into the coffers of a company when they go the QIB route. And it is a big avenue for fundraising, because if you look at the numbers, in 2024, this form of fundraising actually crossed the 1 lakh crore rupees mark during the calendar year.
Yeah, I think because last year we were reading all these companies going with these big QIPs, right? After IPOs, I think that's been a very preferred mode of fundraising. And I was also reading for IREDA, why do they even need to do this fundraise, right? So they are obviously into financing renewable projects, right? And working with the government's aim for all, the green future. So they are planning to raise this capital that will boost green financing, but it will also help the company grow its loan book, because obviously it gives out loans to these companies that need funds to build their projects, and obviously contribute this to India's green energy needs as well.
Absolutely, right. But another thing that's happening as a result is because the company is issuing fresh shares, so there's more number of shares in the out in the market.
True.
So the government, because IREDA is at the end of the day a government-owned entity, the government stake is going to get diluted by up to 7% after this QIB actually goes through. All right, so moving on to the third and final story, Saloni. Adani Wilmar is not really an Adani stock anymore.
So yep, you heard that right. Adani Wilmar is no longer under Adani Group anymore. This is when Adani Group announced recently that they have sold their entire stake in Adani Wilmar, and they have sold it to Wilmar International, right, which already had some stake in the joint venture. Now with this move, the control of Adani Wilmar is now in the hands of Wilmar International, who will be taking care of everything related to the company.
Right, but take me back a little, Saloni. How did this joint venture in the beginning actually happen, and what's the history of Wilmar here?
Right. So the story dates back to 1999, when Adani and Wilmar joined forces to create Adani Wilmar with this 50-50 joint venture or partnership. And now fast forward to February 2022 is when Adani Wilmar, went public and got listed in the stock exchanges as well, right? However, in December 2024 is when Adani Group announced that it was selling its entire 44% stake in Adani Wilmar. So this transaction was completed when Wilmar's subsidiary Lens bought all the shares owned by Adani Commodities, and as a result, Wilmar International, which is a Singapore-based company, they now hold the majority of stake in Adani Wilmar, right?
Right, but on Adani Wilmar, which is essentially an FMCG company of sorts, right, a fast-moving consumer goods company, it seems to be that India is a great market to be in. So why would Adani exit this fast-growing consumption market in the first place?
Right. The reason is very simple, which is with many big conglomerates, right, is to focus on their core businesses. So even for Adani, that's the case, that they want to focus on their core infrastructure and port business, right? That obviously drives up most of their revenue as well. And as part of this strategy is when they announced that they want to divest from these non-core assets, which includes Adani Wilmar, which operates in the FMCG sector. So that's been one of the reasons. And now in a further move to reflect this new, path forward for the company, the Adani Wilmar has officially rebranded to AWL Agribusiness Limited after getting the green light from shareholders for this rebranding and the name change as well. So this rebranding seems to be a big move for the company, showing its new focus on the agriculture and food business. And Adani Wilmar has been making most of its money from these three divisions, which is obviously the essential edible oils, Fortune being its flagship brand, food and FMCG, and also industry essentials as well.
Right, so AWL Agribusiness is what it'll now probably trade it.
Yes.
And it's a clear focus on the identity, not really as an FMCG player alone then, it's more of an agri play.
That's true.
And with that, that's a wrap then, Saloni, on this edition of Bullseye. Thanks for tuning in, folks, and don't forget to subscribe to our channel. Hit that like button if you enjoyed watching this video, and hit that bell icon too when you want to know when the next episode drops. We'll see you next Thursday.